Well, hello and welcome to the Data Made Credible podcast. Today, we're talking about how investors actually build a view of a company through the data that they're given and why that really matters for mid market businesses. My guest today is Ian Heslop. Ian began his career as a discretionary fund manager before moving on to manage a series of quantitative investment strategies. In fact, he led a multi award winning team that at one point was responsible for just over 25 billion US dollars assets under management. That blend of deep company analysis and institutional scale quantitative experience gives Ian a rare perspective on how professional investors understand a business from first principles. Ian, you're very welcome. Thank you, firstly, for your time today. And let me kick off really by asking you, when you first come across a company, a business, what helps you start forming a picture of that business from the data that it provides you?
Well, first of all, thank you, Justin, for a very kind introduction and an invitation for the podcast. I think fundamentally, what we're trying to do with investment processes is to blend as much data as we can really get our hands on. The big issue that you have with certainly with systematic investing, which I spent a long part of my career on, was overfitting, which means building building a data set that you think predicts but doesn't necessarily predict returns consistently.
Right.
So one of the things that really excites me about sustainability or alternative data, which we're going to talk about, or non-financial data, which we're going to talk about in a bit more detail, is that this is very additive to what we are doing already with financial data. The consistency of the data is something that we'll talk about, and that's questionable. But we very much are looking for other ways of explaining return, other ways of explaining risk, and that kind of risk and return forecasting is fundamentally driven by data. So more data, but data with an understanding of why it should work is something that we really do want to explore. It has to be focus. So
Right.
it isn't really something that we just throw loads and loads of data into an investment process and hope for the best. We are trying to understand this idea of additive data. So this idea that you have a forecast or you have a return or a risk forecast, and you are trying to expand your understanding of the universe that you're investing in or the individual stocks that you're investing in by incorporating new data sets. Now, one of the things that I always look for is this idea of consistency and clarity.
Right.
So, in more normal types of data that you would be, balance sheet data, P&L data, it's very easy that you can understand that this is consistent and clear in what it is actually trying to objectify for you. Um, you need the same sort of thing from any kind of non-standard data sets, and this is the important thing I think as we move forward within sustainability or non-financial data, is that we get the same level of consistency and clarity going forward that we have in the more fundamental data sets. The reason why that's really important is that what you're trying to do with this data is both look across the investment opportunities,
Right.
so one company relative to another company, but also through time. So it's really important that if you have a data point for a company that is 3 years old and you have a data point for a company that's relevant today, you can track how that company has changed through time. Actually, this is, I know we're not going to talk only about sustainability, but this is actually the most important thing for sustainable data sets, surprisingly. It isn't necessarily the levels of those data of the data sets. It's actually the change that you can see in the company. The better way that the company is behaving, the behavior of the company improving through time, is actually a better predictor of better outcome for an investor.
So could I sort of turn that on its head a little bit and ask you, from your experience, because investors are often given huge volumes of information in some cases.
Right.
some
Yeah.
of that information can clarify matters and issues and live things that are impacting the business, and some can complicate the picture, create noise, if you will. Do businesses sometimes overwhelm themselves with their own information, do you think?
Oh, I think that can well be the case. I can definitely be the case in relation to certainly speaking from an investor. I think we are in an environment at the moment where the prevalence of new data sets is almost extreme. Whether that's to do with a novel way of thinking about companies, or whether that's to do with AI or scraping techniques opening up new data sets for an investor, it's very very much this idea that there is much more data available now than there ever has been, and that's true for the company itself. But I think the most important thing is to understand whether or not that data is actually relevant, financially relevant for the company itself. Certainly, that's the way that we would sort of progress with an opportunity within data, is to understand whether it's relevant to our universe. And I think you're right. I think the opportunity that management teams have at the moment to incorporate this idea of non-financial data into the way that they manage their companies and they allow their companies to evolve through time. Um, it's exciting, but it can be completely overwhelming in relation to what to focus on, what not, what to ignore, and what is ultimately ignorable in a very very large opportunity set.
So we talked at the start. You really, I think, bring a unique perspective to this because you've been a fundamental manager, or forgive me, a discretionary manager who's used fundamental techniques to analyze, boil down probably a finite universe of stocks. And then you've also, if you like, gone to the other side of the spectrum with your systematic fund management hat. So you really get and have and bring to this conversation insights around how different disciplines rely on data, and that's what I think is super exciting to explore and delve down on. So if I may, from your experience, how does the quality of a company's data shape the way analysis and decision making actually happen at a business level?
Yeah. So from the first principles, I think the data quality lends extreme amounts of credibility to the company providing that data. So, as an investor, taking a step back and talking about it as an investor, if you have the ability to generate quality, reproducible, and
Yep.
consistent data sets through time, that tells us something about the internal mechanisms for managing that company. So it's always good to see consistent and credible data. I think when we talk about my qualitative versus quantitative background, that's just a truism. You don't make investments into companies that can't tell you X, Y, and Z consistently through time. Qualitative data, I think, is what trying to forecast a better balance sheet, trying to forecast a better P&L. That's kind of the important things of SWOT analysis on your peers or peers of a company that you might be investing in. And sustainable or non-financial information kind of augments that forecasting. It gives you a view of the risks to your forecast. So, water use, power consumption, that sort of thing, that you can hone in what makes your P&L a better forecast than perhaps you get elsewhere. With quant, it's slightly different because what you're looking to do is add to the forecast that you have. And that again, coming back to this idea of data integrity and consistency through time, it's fundamental to how you will be viewed as a company within an investment process. It's hugely important. You don't need to have the same signals. You can use different signals for different industries, and as long
Yeah.
as the quality is present, because you do naturally have to recognize, and as companies, you have to recognize that some things are important to you that may not be important to companies that do very different things to you. And then also importantly, I think there is definitely this idea of I hate the buzzwords, but the idea of quantimentals. So the idea that you can use qualitative and quantitative data to better understand what you're actually seeing. So I think what was a really interesting way of kind of thinking about this idea of non-financial data is the idea that the quantitative data is kind of telling you what is actually happening, and then you can
Right.
use qualitative data through kind of AI or machine learning to understand why it's happening. So the policy that's actually driving the changes that you can quantitatively measure. So I am very clear that kind of this is not a kind of nice to have. Certainly from an investor standpoint, this is not a nice to have. And I actually also think that almost companies are throwing the opportunities away by not having this broader understanding of what drives their industry or what drives their individual company. The idea of, again, a bit buzzwordy, but the idea of orthogonality. So it's giving you just another lens to look at your company. It naturally must be beneficial as long as you are focused and you understand the impact that the individual thematic that you might be measuring has.
So we've been talking, and I should have outlined this perhaps earlier in our conversation. We've been talking predominantly about listed companies up to this point, based on your investment track record and your expertise. So for many private companies, so those that are still under private ownership or backed by private capital, the perception of risk often comes from what is not known
Yeah,
rather than from what is known, if you will. And when information is missing or it's inconsistent, it can, certainly create a perception of the business appearing riskier perhaps than it really is. And just really want to look at this again from your investors, perspective.
yeah.
How do these gaps in data affect the way a private company is perhaps understood and even assessed, if you will?
Yeah. Well, that's a really good point because, unfortunately, um, giving the benefit of the doubt to a company based upon the fact that they're not providing a data point that perhaps is available from their peers is never a good thing to do as an investor. So I think it may not feel fair, but it's a truism that if you are not able to provide the data that is available from other investment opportunities, then there is a big why is that the case? Financing costs are naturally lower. All of the things being equal, they're naturally lower if you provide more data to the investor. That's just how the world works. The other thing that I always talk about when you talk about these things, when investors may say or companies may say, but that's not really that relevant. The point is that you can't do it. So it's almost like the cockroach effect. If you see a cockroach on the floor, there are 20 behind the skirting board.
Yeah.
If you can't provide data consistently across time as well, again, to repeat that kind of idea that we want to measure how these things are changing through time, then you're naturally, there is a question mark. The data thematics themselves, remember, the more different data items that we can use to make our forecasts, the more that we have confidence in those forecasts. Whatever those forecasts are, we have greater confidence in those forecasts, and that naturally leads to higher positions within a portfolio. If you have higher confidence in a forecast, you're naturally going to load that more into a portfolio. So all of this is good. All of this is good. We are confident, hence we provide capital that is naturally at a lower price point to a company because we have confidence in the company itself naturally should feel that they are providing data that's relevant, and hence internally, if the external investors are finding this relevant to understanding their company, then perhaps it might be relevant for the company itself. And again, fundamentally, I think, as an investor, you have the privilege of running other people's money. There is somebody sitting behind me, and the person sitting behind me has their say in how we invest money now, and this is important to them as well as important to us in our investment process. So this is just a natural thing that I think that, private companies, yes, there is naturally, we know that there is less visibility because public companies are required to make, very large amounts of data available. But I think it's hugely relevant that, for a private company setting itself out for investment, the more data you can give across more channels will lead naturally to a better relationship with the investor. And that better relationship will naturally lead ultimately to what we all want. The investor makes money and the private company is able to raise capital at a reasonable cost.
So you mentioned a couple of points there that I think are incredibly important. The first, you mentioned there's layers of stakeholders involved here. This isn't just a management team conversation into a kind of echo chamber. There are real, I think the term is asset owners that have obligations that they need to meet, which requires disclosure of data. And in between them, as you said, you've got almost the intermediary, the investment manager, who in turn have their obligations. So there's a whole chain of command really in this conversation. It's not a binary conversation anymore.
No, that's absolutely true. That's absolutely true. I think it's interesting when you look at, how this evolves through time, that the same data is being used by multiple different stakeholders. Um, and that gives, I think that should give more confidence, actually, that if the asset owner is interested in how this looks in their portfolios, and then the asset manager is interested in how this looks at their portfolios, and then the actual underlying companies themselves, I think all of this really does point to the fact that this is valuable data that perhaps is not necessarily captured as well, when it is not structured. That,
Right.
with the big caveat that financial materiality is massively important, right? It isn't the case that you just go out and measure hundreds of different things
Sure.
and hope that giving all of that information to either your CFO to make a better prediction or to the market to make a better prediction is going to help, because it isn't necessarily going to help. To your point, Justin, at the start of this conversation, I think you end up then with just too much information, and how do you make an understanding of kind of what type of information is relevant to you and what type of information isn't relevant. This idea of defining the key sustainability topics that are likely to be relevant to the firm, once you're thinking about this in relation to internal data that you can use to better manage your company, that's a hugely difficult question. It is not necessarily difficult, but it is more of a question that actually has the most weight. That how you define what's important to your investment, or
Yeah.
sorry, to your investment processes, being me, but actually
Yeah.
more important to how you run a company is hugely important as well. So I would say that this is where kind of, history within this type of environment comes in very useful. So, what are your capital providers using to look at you? Might be something that you can start with, or what are peers using? What are data companies
Right.
providing within that type of environment? But ultimately, I mean, again, it's a truism, but it is true that the people who are running the company itself understand the company the most out of anyone else
Yeah. They're
within
the
that
cold base,
vertical,
right?
right? Within that investment vertical. So ultimately, you should know, or you should have a pretty good idea of what is pertinent, what is financially material to your company and what isn't. And that can be something that can, you can build through time. But I think, again, just to reiterate, in my view, this is a really exciting time, because we've had financial data for years and years and years. And yes, it's very consistent, and you know what you're buying. It's very transparent. You understand what it's trying to measure, and there are rules on how it's to be measured. With non-financial data, this is where I think we are going to see more and more opportunity to really add value.
Right.
So this idea of understanding what you need to measure for E, S, or G, or other types of non-financial data, what that really needs to look like. Because as an investor, I'm it's not a bugbear of mine, but it is true that when you're trying to manage money, and you're trying to build in a new idea, it is very disheartening when you go to multiple different data providers
Yeah.
and they measure the same thing and get multiple different results. So,
Outcomes. Yeah. Right.
as an investor, that's just a disaster.
Yeah.
So
Where do you start to unpick that?
well, it depends on who you ask what the answer is. That's not great. So again, the thing that I would come back to, and I think that the thing that I just hope, and I think data providers will come to this at some point, but this idea of standardization, this must come at some point in the future. That everybody is reading non-financial data in a similar way, or there is an overarching way of doing non-financial.
Right. Now, there's something again. This is the second point I wanted to raise from earlier. You touched on what I would term sort of behavioral psychology, or you alluded to it, and I think that's fascinating. Obviously, wearing your systematic hat, it's particularly relevant.
Yeah.
But what I want to ask you is, better data is not just for investors. I think we've established that. It can completely change how a management team understands its own business.
Mhm.
And I think this is where I'm sort of angling at in terms of the behavioral aspect of this question. In your experience, what starts to shift inside of a company when its core data becomes clearer and more consistent? I'm thinking here about maybe culture as an example, but certainly efficiencies, and just want to get your thoughts around that, because I think this is a very interesting point that often is maybe downplayed or not fully ventilated in discussion.
Yeah, it's an extremely valid point. The behavioral change within a company, um, whilst it's not naturally visible externally, we all know what it's like to run a company, to be part of a management team within a company that doesn't have sufficient data to make the right decisions. That's kind of it. Just feels awful to be almost kind of guessing. Whilst that isn't necessarily something that happens often, I think you can use that as you can use that as a next step. That fundamentally, if a company understands how it needs to express itself externally, but also how it needs to express itself internally, will take the company and its employees along the same journey together. So I would say fundamentally, if I'm in a management team, the management team are trying to do exactly the same as investors are doing, right? Predict or invest in a company that will succeed, right? So if I would say strongly, if information is interesting to us as investors, then it should be interesting to the company as well. So that helps with the kind of managing the company day to day. But actually, it is also really important, I think, to take your employees along with you. And a lot of the kind of non-financial data, the financial data naturally has to be something that is kept close within the within the management team. But I think non-financial data is something that you can really kind of use as a way of explaining to your employees what the outcome of this company is meant to look like. So I think, from a behavioral perspective, I think it gives you huge opportunities to kind of paint the picture for your employees, but without like losing sight of the fact that this is data that, as long as it's, again, to go back to the point, as long as you are comfortable that it is financially materially important to your company, then everybody should have confidence using this data. It leads to better decision making. It leads to, more fundamental thinking about outcomes that perhaps aren't necessarily specific to this quarter, but will have an impact in the next 2, 3, 5, 10 years that you hope that this company will be living through.
And I think that's a critical point you've just raised, because a lot of this audience that the podcast is looking to reach will be involved in curating uh, a lot of this data, and given that these predominantly medium-sized businesses may be at a very early part of the journey, it's going to be evolutionary. So,
Yeah,
you
sure.
know, I think your earlier comments are helpful here around bringing consistency across time, and really, I mean, what you're saying as an investor is it would pay to dig deep and commit to this sort of discipline around the financial materiality. Am I reading that right, or am I putting your words in your mouth?
No, I don't think you are. I think that it's naturally a journey. I think, when you put new processes in place, it's a journey. But we all know that if you put the correct grounding in, or the basement level in, knowing that your journey is going to be a 3 to 5 year journey, and you want to do X, Y, and Z, then it's naturally better to design that investment, that process, to get to that endpoint with the knowledge that that endpoint is quite materially far away. I don't think it's necessarily the case that, short term fixes based upon budgetary constraints are a bad thing per se, as long as you don't feel that you are wasting money. But I think there are opportunities out there to bring in external expertise, so at least you know that you have the fundamentals correct, and then you can build it in a way, again, that this financial materiality, it naturally must be material to your company, that you're spending your own money implementing some kind of measuring. So ultimately, it is something that requires this idea of, I am building for the future, and I'm building a scaffolding that I will be comfortable still using in 5 years' time.
And really, to wrap up, cognizant of time, and how, how disciplined we are in such matters. To finish, if a leadership team wanted to take a straightforward step this quarter to improve the usefulness of the data that they produce, what's something that's realistic and achievable that you would suggest they set for themselves?
Well, I mean, that's the $10 million question.
Where
It's
do
a-
you start? Where do you lay that foundation
Where do
stone?
you Yeah, it very much depends upon where the company is in its life cycle in relation to non-financial data, right? If they're in a position where they have never provided this data
Yep.
before, then
Some will.
you
Yep.
could
Yep.
almost argue anything that you can provide is going to be beneficial, because it's giving yourselves and investors, as I said a bit earlier on, maybe a slightly more confidence in relation to how they look at the company, and hence a greater confidence in relation to how they make their predictions about the company's outcome. So almost, anything that you can provide that gives that extra layer on top of kind of financial data that you already provide is going to be really well taken. If you are further along that road, I think there is a strong argument about this being seen more as core than peripheral, and this idea of kind of ultimately this isn't something that I'm doing because I have to do it, but it's something that I'm doing because actually it is beneficial to my understanding of how this company will perform in the next 5 to 10 years. That's the opportunity, I think. And that's kind of where, irrespective of what's happening with, government
Yeah.
forcing companies to do things or not, and there's a lot of flux at the moment, I think that the fundamental point is this is information that you have provided to yourself that you're not looking at right now. And to me, that's an easy win, that you start to better understand the data that you're providing. You start to ultimately use that data internally to better understand how to run your companies, and we will love it externally.
Ian, I want to thank you for your time today. I've got like a host of other questions that I feel we could explore. So what I'm going to do is I'm going to wrap today, and I'm going to propose, depending on the feedback that we get on this, maybe come back for round two if you'd be amenable, because I think there's just so much here to really get your hands around. Half an hour really is scratching the surface, but I want to thank you for your enthusiasm and for your insights and for bringing a genuinely unique, I think, perspective to this conversation today.
Well, thank you very much, Justin.
Thank you, everyone.